The World Bank has called on Nigerians to ensure that the positive outcome from its recent macroeconomic reform translates into real improvement in citizen standards. As estimate shows that about 139 million Nigerians are living in poverty. Country Director for Nigeria, Matthew Vaiz, made the appeal during the launch of the latest Nigerian Development Update report in Abuja. Welcome to Business Point, where we extract the Nigerian economy and the government policies. I am Kike Lomo Okere. Country Director for Nigeria at the World Bank, Matthew Vaiz, commended the federal government for implementing bold policy reform, particularly the removal of petroleum subsidy and exchange rates unification, noting that this action have begun to stabilize the economy and lay a stronger foundation for long-term growth. According to him, the effects of these measures are becoming evident in improved revenues, stabilizing foreign exchange markets, growing reserve, and a gradual decline in inflation. However, he cautions that millions of Nigeria have yet to feel the benefit of this reform, warning that macroeconomic gains must be swiftly converted into welfare improvements. He noted that despite these stabilization gains, many Nigerians are still struggling. In 2025, the bank estimates that 139 million Nigerians live in poverty. The challenge is clear: how to translate reform gain into better living standard for all. The new NDU report, titled "From Policy to People, Bringing Reform Gain Home," outlines a three-point agenda for sustaining progress, reducing inflation, and improving the efficiency of public spending, as well as expanding social safety nets. Vaiz emphasized that curbing food inflation is particularly crucial to protecting poor and maintaining public support for ongoing reforms. He further stressed the need for better management of the public resources and stronger safety net programs to cushion economic hardship and promote inclusive growth. Vaiz reaffirmed the World Bank's commitment to supporting Nigerian reform agenda through policy advice, technical assistance, and financial support aimed at fostering sustainable development and shared prosperity. Nigeria's economy continued its upward momentum in September 2025 as the Purchase Manager Index rose to 54.0 points, indicating stronger expansion in business activities across key sectors. According to the latest PMI reports released by the Central Bank of Nigeria, the index from 51.7 points in August, marking the 10th consecutive month of expansion. The improvement reflects broad-based growth across the industry, service, and agricultural sector, reflecting sustained economic resilience in the third quarter of 2025. The composite PMI growth in September, alongside its three major sectoral indices, industry, service, and agriculture, indicated a healthy improvement in overall economic activities. The report shows strong readiness across key indicators, with output index of 54.8 points, new orders index with 53.7 points, employment index with 53.4 points, raw materials inventory with 52.9 points, and suppliers delivery time with 54.6 points. The numbers reflect rising production, higher demand, and faster supply chain performance, suggesting that businesses are operating more efficiently. Out of 36 subsectors surveyed by the Central Bank of Nigeria, 28 reported expansion, while only 8 recorded mild contraction. The forestry subsector recorded the strongest strongest performance with impressive 73.6 index points, while metallic mineral products posted sharpest decline to 40.7 index points. Composite with input price indices is 64.2 points, output price indices with 59.9 points, industry input price with 63.1 points, output price indices with 58.3 points, service input price indices with 62.9 points, output price indices with 60.7 points, agriculture input price indices with 68.4 points, output price indices 60.2 points. The agricultural sector recorded the highest input cost, while the service sector posted the highest output price for the month. Conversely, the service sector had the lowest input price pressure, and the industry sector had the lowest output price in September. The PMI is a key indicator of economic health as regarding above 50 signify expansion. Nigeria's 54.0 reading in September indicates continued improvement in output, new orders, and employment. This sustained expansion in positive signs for investors and policymakers, pointing to growth, business confidence, improved supply chain efficiency, and a stable macroeconomic environment as the country heads into the final quarter of 2025. With strong performance across agriculture, service, and industrial activities, Nigeria's economic outlook remains upbeat, signaling that the country's post-tightening recovery momentum is gaining ground. The Nigerian Upstream Petroleum Regulatory Commission (NUPRC) has unveiled a comprehensive gas development roadmap aimed at unlocking over 55 trillion cubic feet of uncommitted gas reserve and attracting billions of dollars in new investments across Nigeria's gas value chain. According to the Commission, the initiative was already attracted about $4.9 billion in capital expenditure. Investment within Nigeria's gas value chain. In a statement posted on X, formerly Twitter, the NUPRC says the roadmap is designed to mobilize new investments, enhance gas infrastructure development, and accelerate the monetization of the Nigerian vast gas resources, thereby strengthening the country's energy security and industry growth. Speaking at the third Gas Investment Forum held in Lagos, the Commission Chief Executive, Engineer Gbenga Komolafe, represented by the Executive Commissioner Development and Production, Engineer Enorose Adamasu, outlined the Commission's strategic focus on driving gas development, monetization, and infrastructure expansion to secure Nigeria's energy future and support economic transformation. According to him, Nigeria's proven gas reserve currently stands at 210.54 trillion cubic feet, comprising 109.51 trillion cubic feet of non-associated gas and 101.03 trillion cubic feet of associated gas. He noted that about 55 trillion cubic feet, representing 26% of the total gas, remain uncommitted to any existing or planned monetization projects, a clear indication of vast untapped opportunities for both domestic and international investors. According to the agency, Nigerian reserve replacement ratio currently stands at 1.56 points. Adamasu further noted that the country recorded an average daily gas production of 6.99 billion standard cubic feet in 2024, while the reserve life index is estimated at 92.7 years, a strong indication of long-term sustainability and security for investors in Nigeria's gas sector. The national gas reserve, it says, grew from 208.8 2.83 trillion cubic feet in 2023 to 210.54 trillion cubic feet in 2025, while gas production rose from 6.91 billion standard cubic feet per day to 7.61 billion standard cubic feet, reflecting steady growth across the value chain. It further disclosed that the Commission is actively facilitating regulatory approval and negotiations for upstream gas supply to major projects such as LNG training, the Ajaokuta-Kaduna-Kano pipeline, and the Brass Fertilizer Petrochemical project. Engineer Adam also observed that NUPRC is currently monitoring 19 active gas development projects comprising 10 production facilities and 9 pipeline projects with a combined capacity of 3.55 billion standard cubic feet per day. About 88% of these projects are in engineering phase, while 12% have progressed to construction or fabrication. He explained that 86% of the new gas production projects are targeted at the export market, particularly feed gas supply to the Nigerian LNG, while 23% are directed towards the domestic market. It could be recalled that earlier October, NUPRC reported a strong resurgence activities across country's oil and gas upstream sector, highlighted by a remarkable rise in rig count from 8 in 2021 to 69 as of October 2, 2025. In a statement marking its 4th anniversary, the Commission's head of Media and Strategic Communication, Eniola Akinkotu, says the significant rise in active rigs reflects renewed investors' confidence and demonstrates the growing stability of Nigeria's petroleum industry. According to the NUPRC data, Nigerian crude oil production grew by 5.5% year-on-year in August 2025, averaging 1.43 million barrels per day, compared to 1.36 million barrels per day in the same period of last year. The Nigerian incentive-based risk sharing system for agricultural lending has announced a significant milestone, facilitating over 70 billion naira in commercial financing for agribusiness as of the 3rd quarter of 2025. In a statement, NISAL says the achievement marked its strongest annual performance since its inception and represents a crucial turnaround for agricultural financing in Nigeria. NISAL PLC is a non-bank financial institution established in 2013 to transform Nigeria's agriculture sector to unlock affordable structured finance for agri-businesses across the value chain. It is the result of a collaboration between the Central Bank of Nigeria, the Federal Ministry of Agriculture and Food Security, and the Bankers Committee. The substantial capital injection comes at a critical time for the sector. Bank lending to agriculture had been on a steady decline, plummeting from 6.18% to aggregate lending in 2022 to 4.82% in 2024. This trend was mirrored by a slowdown in sectoral growth, which fell from 2.5% to 1.7% within the same period. NISAL intervention has effectively reversed this decline, with agriculture's share of banking lending now rising again to 5.33% as of May 2025. It was also revealed that over 32% of the facilitated sum directly supported value-added commodity export. Speaking on this achievement, NISAL Managing Director and Chief Executive Officer Sahad Hamidu underscores the significance of the fund. It says 70 billion naira may appear modest compared to the size of Nigeria agricultural financing needs, but the significance is profound. It proves that agriculture can be commercially and sustainably financed with the right blend of capital, technical support, and risk mitigation, the sector can become more productive, resilient, and globally competitive. NISA says that through the deployment of the tool for value chain modeling, providing targeted technical support to agribusiness and financial institutions, and activating robust risk-sharing framework, it has successfully restored lenders' confidence. This has channeled fresh funds into critical value chain, including grain, cocoa, share, and livestock beyond impressive headlines figures. NISA initiatives are reshaping the entire lending landscape for agriculture. The bank added that it will be developing a digital network called NISA Land Bank Portal, which will be an ecosystem consisting of agricultural stakeholders from research and development to markets to provide data-driven insights for investors, policymakers, and development partners for identification of the opportunities, risk reduction, and informed decision-making. The Land Bank Portal will become an additional channel for projects development with climate finance and other potential source of funding. NISA says it continues to deepen its interest in and collaboration around climate finance, recently signing an understanding with Rural Electrification Agency to provide off-grid power to production and processing cluster in rural locations. This effort, the institution believes, will build resilience in agricultural value chain and aid the Nigerian push towards 1 trillion naira economy. All right, let's take a quick short break now. We'll be right back. Don't go away. Stay with us. Welcome back. If you're just joining us, it's Business Point, where we extract the Nigerian economy and the government's policies. The Central Bank of Nigeria geo-tagging mandates represent a watershed moment in the evolution of Nigerian digital payment ecosystem, with over 4.2 million points of sales terminals now required to integrate GPS technology and connect to national central switching with a 60-day compliance window. This directive transcends routine regulatory housekeeping. It signals a fundamental shift towards creating a fully monitored, geospatial aware financial infrastructure that could reshape how economic activities is tracked, regulated, and understood across Africa's largest economy. The timing is particularly significant as Nigeria continues its aggressive push towards cashless transaction while grappling with persistent fraud challenges that have eroded consumers' confidence and inflated transaction costs across payment value chain. From a macroeconomic perspective, this initiative tackles a critical market failure: the proliferation of information asymmetry in Nigeria's payment ecosystem. The current system allows ghost terminals and clone devices to operate with minimal oversight, creating an environment where fraudulent transactions can flourish unchecked. By mandating real-time location verification and centralized monitoring, the CBN is essentially installing a comprehensive surveillance mechanism that brings previously invisible economic activities into formal framework. This transparency dividend extends beyond fraud prevention. It creates the foundation for evidence-based monetary policy, more accurate. The GDP calculation and targets financial inclusion intervention. Non-compliance results in terminal deactivation, effectively forcing a binary choice between substantial upfront investment and market exits. This creates natural consolidation pressure that may favor larger, well-capitalized operators, while potential displacing smaller players who cannot absorb the compliance cost. This geographic constraint could inadvertently reverse financial inclusion gain, particularly in underserved regions where mobile agents have been the primary bridge between formal financial service and excluded population. The policy creates a tension between security and accessibility that requires careful calibration. Rural agents who depend on mobility for their livelihood may find their business model suddenly unviable, potential creating service deserts in area where financial access was already precarious. Geotagged transaction will create an unprecedented granular map of Nigerian commercial activities, providing policymakers with real-time insight into economic partners previously hidden in the formal sector. Before we call it a wrap, let's take a quick look at the stock market. The Nigerian exchange maintained its bullish momentum on Wednesday as renewed investors' confidence pushed the market capitalization by 459 billion naira, driven by sustained interest in banking and oil stocks. At the close of trading, the market capitalization rose to 92.5 trillion naira from 92.04 trillion naira recorded on Tuesday, while all share index appreciated by 0.50% to close at 145,719.09 points. A total of 525.7 million shares valued at 13.59 billion naira were traded in 25,571 deals, representing a 4% rise in volume, a 44% drop in turnover, and a 17% decline in the number of deals compared with the previous session. All right, this is where we'll call it a wrap on Business Point today. Join me again tomorrow on Global Television, channel 365 on DSTV and 276 on Star Times. To stay connected, kindly follow us on all our social media platforms as Global TV NG. Till I come your way again, I am Kike Lomo Okeri. I celebrate you all.